this one down 30.79 on that 6:30 call, and we have bids at 15 cents and 35 cents below the market. They were 31.88 yesterday's close. Yes, yes, yes. They have really stole the premium, but we're not going to talk about that. We're going to talk about the land of opportunity at the entry. And so we go ahead and bid up them 200 contracts down here at the bottom, and we'd be looking for a minimum of a 80 to 130 penny range off of the bottom when they stripped that 630. Now, remember that you would have to run rapidly off the bottom after you get triggered and run toward that strike price. Now, let's feature the 625 call. We got these at $1.40. Where did they close? $35. Down $31 that call contract on the 625. We got limit orders out to buy 50, possibly 100 at the total benchmark of $1.40 at that king wholesale bid. Once again, it's not about what they did and how they price fixed it, in my view. It's about you knowing how to get below it and how to get that positive transaction. And that's exactly what we're going to do. So 330 by 350, 338 is the low, 2330.10 was the high. But let me tell you what, they closed at 35. They already got marked down. And then the Ponzi scheme was running at full speed. So what? It's how you understand it and how I understand it, and how we put this down here at $1.40 on 100 contracts. I'm saving 20 grand on that wholesale drop, no matter how you look at it. And I'm buying 200 contracts over here. I'm well below. I'm about 25,000 below the hip on that, and I might get hit on them bids where everyone else is up here, you know, buying 50 and 100 up here at $1. I'm still below them. I'm still below them. That's where I'm going. Nothing's stopping me from that bid. I've got it out there. Why? Because, hey, if you don't believe what can happen to them, if that's not enough to convince you, well, this will be when I get hit and sell them. So that's where the update is. Right now it's 9:59 a.m. Pacific Standard Time. The markets have taken a haircut today. There's been a lot of manipulation. We don't even need to talk about it. What we need to talk about is why we're experts and how to take advantage of when things are not normal. So what? How do you come out on top? That's what counts. That's what we're here to do right here and now. So once again, he's going to have to drop that bid right here, MMT. I'm going to bring up that Google chart again right here, right now. Here it is. He's down here at the bottom. He's got a 12 IR. I don't know if my thing is updating or not. I need a confirmation. 12 is correct. I'm hearing 189 is correct, and you're below that teeny line. So what does that mean? That means that the high was 648.99 and the low was 623.54. And what'd they do? Well, I know how they did the options. They priced them that way and walked away from the bid before they knew, yeah, okay, so here we go. Let's get down below the floor. And the thing of it is, we're at that lowest bid. Now, we're going to have to sell down, MMT. You're $3 off of that swing low here, off of that at 1000 a.m. At 1000 a.m. At 1000 a.m. I've got a $3 625 bid with an ask of 330. With the close at 330, 35.14. The high on these contracts, once again, I'm out here to buy them at $1.40 if I can get it. If I can get hit over here, well, then we're going to look and see what kind of upside volatility would come from those wholesale entries. No one would be lower. They already beat us once. They're not beating us twice. Here it is now, live, right here. Here's that 625 call. That was $35. We're down here to buy it at $1.40, like I said earlier in the video. Well, yeah, we're going to come back and get our money. You damn right we are. And over here, you know that we have bids at 15 cents and 20 cents on that 630 call. And right now, printing 60 cents. Right now, printing 60 cents. It's here. It's live. This is how the public can get marked down. But guess what? Not very often do we get marked down. We're not in it, but we're going to buy it. But 298 contracts, 0.75 cents. Another 298 off that bushel side. That was taken at 75 pennies. That was a 15 cent Premium to that at 298. 298 up at 75 pennies. 0.60, 0.75. That's that swing low. We got 623. It's a $3 ratio off of the low. We'll update you when we get that doodle dandy. That's at 630 that expires. Here it is right now. I'm printing 270, 625. Here we go. We got that Johnny coming in at 459 contracts at 75 pennies, and another print of 298 contracts at 75 pennies. Here we go. We got them printing 75s, all right. So I don't know where that 459. Look at all the 75s. 69 more contracts at 75 pennies, 75 pennies, 75 pennies. And we are in action right now at buying. What happened to the poor public in these calls today is that we're having to come over here and buy the bottom and make something from it. That's what we're doing. That's what we're doing. Now, give me 10 of those other 625s. Based on that hip clip, it's a hip clip. Take it 340. Yeah, bam! All right, now stay below there and let's work it. Here we are, MMTs. We already made wholesale bids. We bought this low, sold for a profit. We're going to work on doing this nickel bid over here. Remember that 5-cent bid on that 25 cents is a low. They were $31.88. How does the public feel about that?